This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Trip Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
Welcome to the Texas Land Guys podcast. Tim, how are you doing this morning?
I'm doing good. Doing really good.
I think this is going to be an episode that we've been talking about and looking forward to for a while. We are going to talk about questions from our audience that people have sent in. So first of all, thank you for everyone that has sent questions in. I know, Tim, I speak for both of us. Whenever I'm on a call or someone says, hey, and by the way, I just listened to the podcast or I listened to your podcast, it's always really encouraging and a lot of fun. I mean, we know that people are listening because we have the stats, but when you actually talk to someone and they say that I listened or I really enjoyed this about the podcast, or, we've even had people that, like with the health podcast we did with Trip, that have like, a guy told me, he's like, I didn't drink coffee this morning. And I was like, well, I did, but, just are trying to take some of the advice or learn from some of the things we've said. It's fun. And so I always thank people just for the support whenever they tell me they listen. And I know we both really appreciate it.
Yeah, I think we've been blown away by the reception that the podcast has received and just how many industry leaders and, clients, people that we don't know, that are successful developers or brokers, that we'll find out that they're listening and maybe some questions that they have. Or in the case of the health one, like you said, I had several people reach out to me specifically saying, hey, like I'm having digestive problems. I shared on that episode about acid reflux and my battle with that and other health issues. I know you did too. And I think we both had people reach out to us specifically on what we shared, looking for help and for advice. And so just being able to connect with people, connect with the audience has been a lot of fun. And knowing that or hearing them say that there's been a lot of value, that they've enjoyed it, they've learned from it. Maybe they've been encouraged or motivated by some of what we've said, and it really is exciting because that's our intent. Why we spend the time doing this, it's a lot of time and effort and money to put this out there, and it's a little bit vulnerable to put yourself out there the way we do every week, and so it's really fun to get to engage with people and get to hear that they're enjoying it.
Well, we won't be able to get to all the questions that have come in because there's quite a few. I've got about 20 here in front of me that I'll probably just kind of jump around a little bit, and we'll see just how long this takes. I think you've seen some of these, but we'll just kind of go as we kind of go through them as we do it here. So I thought a good one to start with that came from one of our listeners named Matt, and let me find it real quick, was, what is something that you wish you had known coming into real estate? I thought that would be a good one to start with.
I guess I would say it's probably something along the lines of how hard this business is and how there's a need for consistency and endurance and a level of tenacity and grit just to daily be putting the time and the effort in and having a lot of times where you do everything you can to be successful and to help someone and things don't work out and there's no deal that closes and you literally do everything right. You don't make a penny on all your time and hard effort. And there's times where it does pay off and you do get paid. But I think the emotional ups and downs and the fact that you never really arrive, that you close a lot of deals and you make good money, but there's not like a finish line, And so I think that is something that as a young broker coming in, I didn't understand. And I just sort of thought, you get to a point where it's just easy and just everything sort of happens. You don't have to really work for it. And the working for it part never goes away. And the diligence and dedication necessity never goes away.
Yeah, those are good. I was going to say a few things that I knew that would be important to know would just be how cyclical it is. And then also, like when I started in Houston, I remember reading an article about a guy that just won like heavy hitter, I think it was like the newcomer award. And I was still in business school at A&M and they asked him a similar question. And he said that for him, just how tied to oil and gas and the price of oil and gas the Houston market was. And so I recognized that coming in and then experienced that in Houston and how that, the energy prices really did dictate the real estate market a lot of times, just in the short term. So you had a lot of ups and downs due to that. But beyond that, I would say just that the deals take so long, specifically on the land side. They're not quick deals. So I think that's something that would be good to know getting into the business. And I try to tell that to young people that want to get into the business, just that the deals take a long time. So even if even if you find quick success, it's still going to take some time, just naturally, because of how long the deals take.
I think another thing that I learned, I had to learn this getting into the business and sort of maturing the business, is the importance of always adding value. And I think I had a little bit of a entitlement mindset coming in of, if I'm working really hard, then I deserve something. I need to get paid. And having that shift over time to always thinking about, am I providing value? And am I consistently doing that and looking for ways to maybe increase the value I provide? And then not worrying about when I get paid in relation to that. Because what happens in our business is, if you provide value consistently, you will get paid, you'll be successful, you'll make money. It's not determined necessarily for each value add that you do. There's times where you get a ton of value and you don't make any money. So I think just having like a more of a patient mindset and more of a others mindset versus I think when I started, I was very self-focused on, I need to be really successful more for me. And that means that I deserve things. And I think that was just an immaturity that this business has done a good job of working out of me over time.
Here's another one that came from a listener. John asked, if you've experienced very strong markets and weaker markets, when the market is weaker and it's challenging to get deals to pencil, how do you handle that and what do you focus on?
I would say we always think about what can get done, what has the best chance of getting done. And I think the great thing about land is what is hot or what is likely to get closed is shifting all the time. So sometimes it's a really hot multifamily market. Sometimes it's hot industrial. Sometimes it's more of an investor market, or maybe single family is hot. And so I think there's a real balance of really being smart and honest about what's real today, like what can get done today. Because sometimes there's just deals that it's a good deal and it's a good developer. There's no way it's getting capitalized in today's market. And so being honest about that, and then trying to prioritize, like, what are the real deals? Not maybe I'm working on 30 different deals or 40 different deals right now, but there might be 4 of those that are real deals. In today's market, that deal can happen, and making sure I'm doing everything that I can for that to happen. So that's one side of it. The other side of it is always to be planting seeds for when the market shifts, because you're in a cold market now. It might feel like it's always going to be this way. In 3 months or in 6 months or in 12 months, it's going to be a different market. How are you preparing yourself to be ready for that market and not to be behind when that market shifts? Which might mean if it's a bad multifamily market today, we're still meeting with those clients, still showing them deals, still finding new sites, still working on that, so that when things do shift, we're at the table ready to go. We have offers going out that are deals that can get done. And so I think kind of that dual focus of what can happen today, but then what can happen in the future, and how am I preparing myself and my team to be successful there?
Yeah, prioritization I think is really important, and it's hard. It's probably one of the hardest things to learn in the business is prioritizing the right opportunities to work on. And I'll tell guys a lot, like, you can't just prioritize regardless of if it's a hot market or a cold market, if a deal is going to be a quick deal. Like, if you have all of your eggs in the basket of these big deals that are maybe going to be quick because they're zoned and the market's hot and there's people making offers. Or on the flip side of that, if you're working, single family and you're looking at large acreage and you're looking at these whales that are like several thousand acres and you're only focused on that, but those are going to take, 12 to 24 months because they're big mud plays. You really have to prioritize kind of almost like a diversified portfolio of what you're working on, making sure it's real, but not just putting all of your eggs in any of those specific baskets. And I like to say that there's always opportunity. When the market's hot, there's specific opportunity, and a lot of times it's reacting very quickly. You can miss deals, by minutes sometimes. And then when the market's cold, there's still opportunity. And I think it's just working a little bit harder to find what it is. And a lot of times it's just helping people that are more in trouble. And that's the great thing about being a broker is we're an advisor. And so unlike a developer where it can be really difficult to develop in a down market, to get capital, to make a deal pencil, to make a deal work, as a broker, we can still be a part of transactions in a down market because we can add value. If there's someone that's stuck and they need to get out of a deal, or maybe they have the ability to sell and make a profit because of their basis, those are the type of deals that, if we know about them and we're strategic, we can go work on. And so, we talk about this a lot because we've been through a lot of up and down markets. Pretty easy, I would say, to know what to go focus on when the market's hot, because our clients will dictate that a lot of times, and we're following the market so closely. We have to spend a little bit more time when the market's down, just strategizing on like where's the best time going to be spent.
Yeah, definitely.
So let's get another one here. This is an interesting one. So Ryan asked the question, how much or little should a landowner be involved in the negotiation with the other property? And so I guess if you're asking this question to us as brokers and thinking about maybe, because you could probably answer this a couple different ways. Maybe we're answering this as like we're listing a property for a landowner. And so then the question's being asked, if we're listing a property for a landowner, how much should that landowner, and it says, be involved in the negotiation with the other party?
I think it's a great question. There's probably a lot of nuance in this question because I think what I would typically say is you're not the best person to negotiate for yourself. It's better to have an intermediary, somebody who can go, really push hard for you and kind of fight for what you want. I think that there's times where it can be very beneficial for the seller to be more involved. Normally when it's a sophisticated seller and a sophisticated buyer. So let's say you have a developer that is not trying to steal the property. They're paying a market price. Maybe they're paying a market price. Many times when we're working with developers, they may be paying 25% more than anything that's ever been paid in that market. And so they care more about timing the capital markets, being able to execute on whatever they're trying to build, and having that kind of a relationship where they can work with the seller to align things up from a timing standpoint and a deal point standpoint to get there, and then having a seller that understands that. And I think that a lot of times for sellers, there's an anxiety of I'm being taken advantage of and I need to kind of fight for every point. And a very sophisticated seller can understand, all right, they're paying me a really good price. They're being reasonable on their terms. Maybe they need some time, but that's because there's some things that have to happen to pay this price for me. So I'm willing to work with them. And I know where to push and where I need to maybe better the deal. Maybe I'm pushing due diligence a little bit. I'm trying to get some more option money up front, whatever the case may be. But I think there are times where that's very productive. And we love getting buyers and sellers together to have those conversations. So I think that's where there's some nuance in it. I actually had a conversation or a meeting yesterday between a seller and one of our good developer clients. And it was a very productive meeting. And we had already negotiated all the points. We were really getting to meat of how this deal would be developed, what the engineering was like, how the rest of the property that was being bought would be left, how it would be benefited. And it was just a very cordial, I think, really good meeting. And so I think, I don't know how you'd respond to that, Tom. I think that it's hard to kind of say yes or no or have a one answer to that, because there's different scenarios where I would maybe answer differently.
Yeah, I think though that you hit some important distinctions. When you're truly negotiating, I think it's important as a seller to have good representation. So if you hired a good broker, that broker should be able to handle that negotiation. Now, there's going to be times where we've been put in a situation where a seller wants us to get something that's kind of unreasonable. It's like we just know that that's probably not market or just not something that any buyer is going to agree to or do. And so I think in a lot of those cases, we can share that with the seller. We can share like, we don't see that happen. We've been doing this a long time, almost 1,000 transactions, but sometimes it's helpful to then set up a meeting where we can kind of mediate and connect the parties and allow them to talk and communicate directly. Because I think a lot of times a seller needs to hear from a buyer, and kind of when people hear each other's argument and side of the argument, then that can be beneficial. But I think the true negotiation is still being led by and happening through the broker. If you're hiring a broker, that's one of the main responsibilities of the broker. And so supporting them in that and allowing them to go and exercise that. And we've had what you mentioned several times where a seller has said, I don't really need a broker. Like I know the buyers, or I have people that are making me offers. We hear this all the time. I'm getting all these offers. I don't need a broker. And time again, we've seen sellers make mistakes because they got approached directly by a buyer. And then ultimately, like they agreed to sell it for less than they could have gotten had they had a broker. They agreed to maybe give a lot more time, and a lot of it is, it's hard if you're negotiating directly with the buyer to have like good cop, bad cop. And we can kind of be that, bad cop, where when we're in that middle position representing a seller, it still can be awkward and difficult for us to push back on these buyers. And we sometimes are pushing for things that we believe to be kind of unreasonable, but we're doing that and we're pushing buyers really hard because our fiduciary is to the seller who we're representing. Now the seller, they don't really have that same fiduciary to themselves if they're trying to negotiate. And so they, I think, are a lot more susceptible to almost becoming potentially like emotionally involved. And a lot of buyers are so good at like, hey buddy, I mean, this happened the other day. It's like the call starts and the buyer's like, so-and-so, yeah, he was my fraternity brother, and immediately trying to like find that commonality, become buddies with the landowner, it's just like, you're trying to make this emotional connection. Like just because you know somebody that they know or they knew, it was funny. It was like, one of them was like, you played sports with them. And it was like, the seller goes, that was 10th grade. And I was like, so that was like 30 years ago. I don't know how much that matters, but you definitely see that. And I think we can help a lot with that. And we've helped a lot of sellers that they are sophisticated. They're like professional in real estate, professional investors. They know a lot of people, and they still really benefit from us representing them.
Sorry to cut you off, Tom, but part of it is the emotional piece of it, which is similar. If you go sell your house, there's a big emotional dynamic when it's your house, it's your deal. And it's very helpful to have a third party like a broker who's seeing it objectively. They're not emotionally attached to it. They're able to kind of maybe get their ego out of it a little bit. And that way they can go have real good conversations with the other side and push, but without getting super emotional. And it just makes it more effective. And when you get involved and you start getting emotional and you overreact to things, or you start pushing on the wrong things, and you don't see it as clearly when it's your deal.
So transitioning gears a little bit, there's 2 questions here from James that I think are interesting. They're both more about the market. And so I think these could be directed probably at Houston and Dallas. Austin would maybe be a little bit different. But the first one is about multifamily specifically, and the second one's about industrial. So the first one was, are you confident that we will see multifamily rent growth demand grow in 2026? And he says, like everyone is predicting. So I think that there's, that's kind of the narrative, that we have had a lot of deliveries of supply. And so rents are pretty soft, like almost everywhere on the multifamily front. They're just not as high as we really would need them to be to support a lot of new development, or it's just very difficult to make new development work. So there's this prediction that we're not going to see a lot of deliveries of new apartments into 2026. And so with demand supply, rents have to come up. And so to your point earlier, there's not like one way to answer that, because it's going to be somewhat dependent on like the market. But do you think we're going to see an easing of the softening of rents and we're going to start to see some rent growth in 26, or do you think it could take a little bit longer?
I hope so. I think it's a tough question. I think in Houston, we haven't had a lot of deliveries, and we're actually still seeing some softness. I think in Houston, it's very submarket dependent. So there are some areas of Houston where we're seeing some pretty strong rent growth. Even if there are deliveries, the market's doing well. There's other areas where there haven't really been a lot of deliveries, and we're still seeing soft rents. I think it's maybe a bigger question of the overall economy and where the overall economy is going in the U.S. There's a lot of consumer debt. There's issues in the kind of fundamentals of the market that I think are on one side concerning, and I think it mean we have softer rents for longer. The counter to that is, we're in Texas, and so we have population growth. If you're going to have job growth, even in a more challenging economy, you're going to have it in Texas. And so what it probably means is you're going to have a little bit of both answers. You're going to have certain pockets where there was a little bit more supply, or it's just not a submarket that's in favor, and you see soft rents in those markets. And then you're going to have pockets across the state in all of our markets, especially Dallas and Houston, where you have rent growth and you have maybe limited supply, plus it's a place where people want to live and there's some job growth. I mean, there's certain parts of Houston where we're seeing some corporate relocations. We're seeing, big industrial developments happen. There's jobs that are coming to those areas. It makes sense that there's a need for new housing in those areas, and you're going to see some rent growth. I'm not as bullish though as maybe I have been in the past, because I feel like the overall economy, even though the stock market's really high right now, doesn't feel super strong. I don't know what you think about that, Tom, but I don't know if we're going to have runaway rent growth next year.
Yeah, and I think that James asking this question, probably the market's prediction is that we will just have some rent growth that will be somewhat like consistent again, but not what we had post-COVID. Because I think post-COVID you had, and I don't even know the exact numbers, but I know it was like high teens, and in some cases you had like 20 or 30% rent growth. I mean, it was incredible rent growth that happened, but there was a lot going on there that caused that. I think in this case, I would expect us to come back to more normal levels, and maybe you're seeing more consistent, 3 to 5% type rent growth. But I agree with you. I don't see runaway rent growth. Part of the reason being, and Dallas is a little bit different than Houston, we've still had quite a few deliveries in Dallas, and we still have quite a bit that I think will come on the market. Now, it won't be what it would have been. It would have been incredible. It would have been almost like devastating probably to the multifamily market in Dallas had we delivered everything prior, that was predicted to be delivered prior to interest rates going up. So I still think we'll have rent growth because we have, like you said, corporate relocations, a lot of investment in Dallas and Fort Worth, and a lot of growth. I agree. It's not going to be runaway.
I think what's important to think about the context here, because we're looking at just one variable, and it's an important variable, but it's not the whole picture. So, for example, if we have rates come down next year significantly, that's going to have a huge impact on underwriting. And right now, the problem has been rates are high, debt is super expensive. And so when these guys are underwriting these deals, they need these massive rents. Like in Houston, we're seeing deals that are getting rents that were unheard of in the past, especially some of these infill wrap deals like in the Heights, getting really strong rents that you would have been very happy with a couple of years ago. But because of the way the numbers work today, maybe they're getting by, they're doing okay, they're not doing that great. And so I think it's just one component to say like, well, you could have flat rents or even softer rents, but if you had debt get substantially cheaper, that actually may still work. The underwriting might still work. So I think it's important to kind of make sure that you think about all those different aspects.
I think that's a good point. I had lunch with a guy 2 days ago that was like, I think any sane person believes that rates are coming down at least 50 basis points, if not more, in the next 6 months. And so you're going to start to see, it could be 100 basis points, and that time period or a little bit longer. And so that'll definitely have an impact. So the other question that I mentioned from James here was, do you think industrial will continue to hold its pace for the next 5 years? So we've seen a lot of industrial activity, especially just, what's happened because of COVID and e-commerce and, last mile distribution, all the AI and all the changes and just the way that people are ordering and lifestyle changes. And so industrial is one of the strongest asset types across the market. I guess we can answer this more from a development standpoint. Do we see this pace of development continuing for the next 5 years?
I think the hardest part of that question is 5 years, because I think, I would say yes. I think it's going to continue. And I think across the Texas Triangle, you'll see a lot of industrial development. The fundamentals have been good, especially in Houston and Dallas. I know that Austin, there's some concerns, but I think long-term Austin's a great industrial market. I think you're going to see a lot of growth. I think the challenge in our business is looking out 5 years is just so difficult because you don't know what's going to happen from a macroeconomic standpoint. We saw the need for industrial, but then industrial really slowing down the last couple of years when rates went up. So I don't know. I think it's tough to really put a time frame on it, but I think generally I'm very bullish on industrial continuing to keep up a strong pace.
I agree. I think in the next 5 years, will we have periods of, okay, there's a lot of supply in a specific submarket or, potentially a specific market. And so development is going to slow down just naturally. But is there continual demand for industrial for the next 5 years? I think no question. And I think Texas really benefits from that. For example, today, I think, the fundamentals in Houston have been really good. But because of that, you have a lot of investment and focus on Houston. And so that means that it'll probably get, potentially overbuilt. And then in a couple of years, it might look like, okay, Houston's overbuilt. And now we're it just goes through that up and down. Right now, Austin's overbuilt on industrial. Mm-hmm. It doesn't mean there's not opportunities to go do projects in Austin that make sense, but just generally as a market, it's overbuilt. And then Dallas has just had consistent development and has absorbed that development pretty well and leased up a lot of space. We had a glut of 1 million square footers 12 months ago. And now that's down to just a handful, which means that, okay, it's time to go build, some bigger projects again. But that hadn't really been the case for the last 12 months. And so I think that we'll see growth for a long time in the industrial space. It'll stay strong, but I think it'll always have, some hiccups along the way, just depending on what gets delivered.
And one challenge we're having with industrial in Houston, I'm sure it's happening in Dallas and Austin too, is that the good sites where you really want to be have gotten gobbled up. So like in Houston, the places where you'd want to be along the Beltway, they just make a ton of sense. a lot of those are spoken for, and it's pretty hard to manufacture new sites in those pockets. There's just not land anymore, or there's very specific issues why you can't do it. And so now we're seeing development jump to the Grand Parkway and go further out 290. And so that's an interesting discussion when you look at industrial over the next 5 years. What industrial developers are looking at to continue this pace and to continue to get capital for these deals is going to be pioneering some new trade areas and growing in some what today are pioneering areas, just because you're going to have to go there to do deals. You just can't keep doing deals in all the core areas when there's no land. And so a lot of that is going to take, strong capital markets backing, a strong economy to support that. And then, like you said, good leasing and, strong fundamentals to kind of carry that growth into these new submarkets.
So here's one from Vinci that says, the market has shifted. Buyers know it. Is anyone going to tell the sellers? Seems like all the sellers continue to push for their high prices on land, especially the syndication speculative groups. When do they catch up? Can they lower their prices, or maybe they can't because they purchased, for a whole lot more, a higher price, and they put debt on the land. And so Vinci is over at Toll Brothers. This is, the single family space has been impacted more recently just because there was a lot of deliveries and construction pricing is high, and land pricing has gone crazy on the single family side. I remember when I started in the business about 15 years ago, like all the single family land that we looked at was, $30,000 an acre or less. And like you weren't seeing like big numbers out in the suburbs. And now those same locations, you're talking by the foot, and it's like, $4 or $5 a foot for like a couple hundred acres. And so it's become really difficult for single family developers. But we've answered this question, I think, on some other podcasts. So I'm interested in your take on that conversation. I know sellers don't like to hear that the market's suddenly bad and they need to lower their price.
Yeah, I mean, this is what every developer says every time there's a downturn. We'll have people come in our office and they will underwrite a submarket or a deal and say, well, it's worth $50 a foot. That's what I can pay. That's what the seller needs to take because it's worth $50 a foot. And it's just a misunderstanding the mindset that most sellers have. Most sellers that we deal with just across all of our markets are pretty patient, and they have a number in their head. Many times that number may not be super reasonable. It might be based on what they heard pricing was in a very frothy market, and then adding 20% onto that because they think they have the best site. And so a lot of times you're dealing with people that have maybe owned a site for a long period of time. Maybe it's a family, maybe it's an institutional group. They don't have a need to sell. And so think of it as if you owned, a blue chip stock, and the market dips, and you own Exxon or whatever the Amazon, whatever the stock is. It's a good company. It's not going anywhere, and you're thinking, all right, I'm not just going to sell because the market's down, just because the stock price is telling me it's worth this. I don't need the money right now. I'm going to wait a year. I'm going to wait 2 years. I'm going to wait till it comes back. I want to get back to when it was at its high, 3 years ago. I want it to be 10% higher than that. Then I'm going to sell. And so I think many times sellers think that way. And the only time you get a seller really responding to the current market is when they have to sell. And that does happen. People have debt on land. Maybe there's another asset that they have that's more important. And so just liquidating a land asset to go support that asset can be important. Land can be very expensive to carry. And so sometimes sellers will need to adjust to the market and sell. Land sellers are notoriously, not flexible with wherever the market is. And we tend to see, even in long downturns, it really takes 18 months to 2 years for sellers to start to really adjust the market. And they normally adjust the market as the market's actually coming back. Mm-hmm. And then developers are just like Goldilocks zone for 3 months, where developers get these great deals with great terms, where the sellers haven't realized the market is already back and now they can get more money. So I don't know how you see that, Tom. That's kind of how I see it.
I see it the same way. A seller doesn't need to sell unless they have to sell. It's really that simple. And so unless there's some life event or some reason, or they're strapped for cash, they just don't have to sell. Land is not liquid. It's just not the type of an asset that prices day by day. And so I think we've just seen that over the years. And I'm working right now with a couple nonprofits that own land, and they're really struggling with that concept because they want to sell, they need to sell, they have debt on their property, but then they still believe that they can just get like a way higher price, but then they need it to happen really quickly. And those two things just don't go together. The buyers, so, Vinci in this case, it's true that if Toll Brothers is going to do anything right now, then the price is lower. But if the seller just doesn't need to sell, then you can't blame them for just saying, I want, that higher price. But there are sellers out there that need to sell. And so then I think it's the job of a knowledgeable broker that actually understands the market and what has happened to tell that seller that's being honest and saying, like, I need to sell. Okay, if you need to sell, you're going to get, 30% less or 40% less. You need to stop looking at what your neighbor got 2 years ago when the market was different. And you need to, and so I think it is on the broker to educate and advise that seller. But there are going to be a lot of sellers that they're just in a position where we would tell them, wait, like you need to wait. But if they do have a capital event that they need to go fund, then we would tell them you're going to have to discount it. That's a tough conversation. I've had a lot of these recently where they'll ask me, okay, so you gave me this value and that was like a development timeline of maybe 9 to 12 months. Well, I need to sell it in 3 months. So is it like a 10 or 20% discount? And my off the cuff is normally like, no, it's like a 50% discount because you have to think about who you're selling to. You're selling to someone with capital that's an investor that's probably savvy. Every investor is trying to 2x their money. No one's doing it for a marginal 10% return. And so it's a significant discount that you'd have to give. And I don't know that message is delivered that often to sellers because I think either maybe the advisor's not knowledgeable or they just don't want to deliver that. It's kind of painful sometimes to have to be honest like that to a seller, especially if they're also interviewing other brokers, because you're probably not going to get the business by telling them that.
I had a seller yesterday. We were talking about their site, and they're like, "Well, yeah, I mean, like if we had utilities, our site would be worth like 10% more, right?" And I was like, "From a development standpoint, your site's not worth anything without utilities because you can't build anything on it. It's an investment site. If we get utilities, you can actually pay a lot more for it because it becomes a development site." But I think what you're right, it's so important. And the way we handle it is we're not trying to tell sellers like, you got to take this offer. This is the market. It's just having an honest conversation and saying, you want to sell right now. Here's where the market is. This is a good offer. This is a bad offer based on the market. We're comparing it to what we're seeing today. But a lot of times we'll have the conversation, where do we see it going in 6 months? Where do we see it going in a year? If it was a really good multifamily land market, what could this site be worth? And you talk about all those different variables, and then you help the seller decide, hey, I really want top dollar. Okay, that's fine. Let's wait. Let's not take an offer right now. We don't need to go sell it for half the price right now. Let's just wait. And that's totally their prerogative if that's what they want to do, and those are their goals. So I think when you're able to be, as a broker, not pressuring the seller, but trying to actually help them and being willing to kind of have it both ways, like we could do a deal now or we can wait. And I'm just trying to give you honest information so you can make the best decision for you, and I'll support you any way you want. Normally, there's a lot of trust that gets built, and then people are fine, with that kind of a conversation, maybe being a little bit uncomfortable.
This will be a fun one to answer. So this one is on artificial intelligence. And so the question is, how are we seeing artificial intelligence impact the land business? And then a related question of this time next year, do we think that there will be a significant reduction in jobs replaced by AI?
It's a very important question. I'm not sure if I can answer that, honestly, very well. I know, like you, Tom, I listen to a lot of podcasts on AI. I'm using AI as much as I can, personally and professionally. I think it's unbelievable what it already can do. And I think the competition around AI development with all the different companies and even international competition, I think we're going to see it progress very quickly. And it is going to change the workplace in our business and other businesses. It will change the kind of development that gets done. Even things as simple as if you have driverless cars, how that changes parking requirements and changes the need for these big garages, a lot of surface parking maybe on retail. So it's a little bit hard to chart, how quickly does this happen? Exactly how does it impact? I think it's something we're watching very closely and trying to understand it and trying to figure it out. I think that you're going to have, at least in the short term, an amazing ability for AI to reason for us and to think for us and to take a lot of variables that are very complex and make them very simple and distill them down into something that's actionable. And we're trying to do that just with a factor and with our proprietary software systems, taking just literally hundreds of thousands, probably millions of data points that we have that we're collecting every day across all of our offices. How do you make sense of all that? First, you make sure that it's accurate information, it's good quality data. How do you then distill it down and then make it something that you can take really, productive action on to help move things forward to create more value for our clients? And we're in that process of trying to figure that out and working through that. And I wouldn't say that we've made it yet, but we're excited about our progress. So I don't know if that's a great answer. It's just an honest answer. But how would you answer that?
Well, it's all speculation on the impact it's going to have. I mean, I think we definitely see it having an impact. Several lunches I've been at recently, the topics come up. I was at lunch with a big REIT, and they were talking about they're looking at, so they own, hundreds of thousands of apartment units across the country, and they're looking at replacing all of their physical leasing agents with AI. And I guess it's like a hologram that you would like follow around. It's not cheaper than the physical leasing agents, but it's like should be more consistent. And then over time, it probably will be less expensive. But they were looking at that across their platform. And so that would replace a lot of jobs if that actually happened. And then I was actually at lunch a couple of days ago, and this came up, and a guy asked a really similar question. He said that he was with some other guys, and they just went around the table and all made guesses on like what percentage of the U.S. job base would be replaced by AI next year. And everybody was just So I think it's a really common topic that's out there right now. There's another guy that told me his son's in marketing somewhere up in the Northeast, and they used to have a 20-person team, and they do a lot of like coding and a lot of work, like computer engineering. And he said now it's 2 people. It's one engineer and ChatGPT, and then his son, and they don't need the other 19 coders. And same thing at that lunch the other day. One of the guys said, when I was going through college, he's probably in his, close to 50. He's like, when I was going through college, it was like, be a coder. Like, that's the best thing to do. And now that it's like almost not even needed anymore because of ChatGPT, which is crazy. So we talked about just the importance of relationships and like being in a relational role, because there's always going to be need. There's always been changes, with advancements in technology. Now this is different in a lot of ways and like a very totally different level, but there's going to be an important aspect of interacting with the technology and a human element to it. And so I think things like coding, things that are more like, computer focused, it's going to be easier for ChatGPT and those type of tools to replace. But the human contact, and as much as that's important in a lot of industries and businesses, that's going to be key. But it's definitely going to have an impact. I'm not sure if we'll see a significant impact just next year, but I think that we're definitely going to see it over the coming years.
A big thing about innovation, especially technology, is that a lot of times it starts out more expensive, but then it can become a lot cheaper very quickly. And so I think to your point about, if you have a massive REIT and if they're making a shift to get away from leasing agents to go to this hologram AI concept, in the beginning you do that because it's consistent, and it's good, but it's the same price. I think what's going to be interesting is if it becomes like 100 times cheaper at some point, and it becomes 5 times better,
Yeah.
And so I think that's the concern. So I think as we think about our business, and again, as entrepreneurs, this is a business we own. So we're owners and we're brokers, who are working in it. So we kind of have 2 different angles here. We are constantly thinking about how do you use this as a tool? Because it's an incredible tool. How does it make us better? And then how do we continue to add value for our clients that is different and is more personal than just what AI or, some large language model will be able to do. And I think there's incredible opportunity for that. And I think you're going to have a long-term need for humans as much as AI will become a bigger part of our life. But it'll be interesting to see how it develops.
Yeah, we haven't really had it happen yet, or at least no one's told us they're doing it. But, as we're giving advice, I'm sure people are going to start putting our advice in things like ChatGPT and being like, what should I do in this situation? Yeah. And that can be really good. And that can be bad, because the bad part of that could be if the learning model doesn't fully understand or know all the, specifics of the business or just the situation, then it maybe gives you like pretty good advice, but it also can give you not very good advice. And so people being able to also just trust the human advisor and know when you can trust the human advisor versus you should be trusting more the computer. We should probably do a whole episode on just the topic, but I think we should end on this last one because this is kind of a fun one. So this is from Steven asking, what is the best thing about working with your brother and what is the most challenging thing about working with your brother? So I'll let you go first since you've gone first on all of them.
I think, for you and me, there's a lot of ways that we're really similar. I think our value, we grew up together, and our values are very similar. Our faith, the way we see the world, the way we see family, our priorities, I think are very similar. I think we're also like very different people, even though we're brothers. And so I think earlier in our relationship working together, there was probably frustration in that we were different and we approached things differently. And, I think spending a lot of time now working together has been really fun, and getting to appreciate and value the differences and understand the weaknesses and the strengths, and having grace for each other, and just being able to talk about things and talk through things. And I'm so thankful that I get to do this with you, Tom. It's awesome. I mean, if we didn't get to work together, we'd be talking, but we wouldn't be talking like this. We wouldn't get to know each other the way we have. And so that's been really special. I mean, it's fun. I think being a team, just like a sports team, is getting to go, fight together and be successful together is so rewarding and so enriching. And especially when it's with your brother, it makes it really special.
Yeah, I think for me, it would be that, and it would be that because we're brothers, like there's just a loyalty element there that like being brothers is more important than anything else. And so we always will have each other's back. And I think that's really unique and special. Being partners in a business with David and Tripp and Trey and some of the other guys, that's definitely like its own brotherhood. But then when you add the fact that we're actually brothers on top of that, and all the history that we have, I think that is really special. And it always gives us something to talk about, when we're together, and we actually know what's going on in each other's lives. And then, I pretty much on my commute, if I'm calling somebody, I'm normally calling you, even though we're also, working together, because we're catching up on just, one of your kids, something that's going on, or a football game, or, whatever it is, or some ministry thing that we're doing, or something we're involved in. And so it's pretty fun to get to do that together. And of course, to get to work with our younger brother, John, too.
Oh yeah.
Is also special. But running a company together as brothers and just being entrepreneurs is like also just has its own challenges of just the things we face. And so being able to relate to one another and talk about stress and how we're handling stress and what we're doing. And I've always looked up to you a lot as just being the older of the two, and just the different things that you've kind of trailblazed related to like, health and even just generosity and things that I've learned from you. So it's pretty special to have that history together, because I still remember growing up and sharing a room together, when we were kids, and putting on those boxing gloves and fighting each other. And the first time I beat you in basketball. So,
I still don't remember that.
Yeah.
I must have blocked that out.
But I think the hardest thing was just how we were different. And I think that we've figured out now, we've been doing this together for like over a decade. So I think figuring out that, we've read a lot of books. And so I think like books like Working Genius, and realizing that in that we are similar, we are very different, and like our working geniuses are very opposite. So we need to embrace where we're strong and how we're different, and be able to work through that. And so we've definitely had our arguments and, blow ups, but I think it's a lot less common than it used to be, because we've just really learned, if one of us says something that rubs the other one wrong, we normally realize like that's just a personality thing. It's just the way we are. It's the way that we see the world. It's just a little bit different sometimes.
No, that's right. And if you think about what we've been through running this business, I mean, market downturns, COVID, personnel issues, just like you go through some really hard things being an entrepreneur, and you really have to get to the point of like, you're kind of like in the same foxhole together. You're calling each other, you're working through things. There's times where you're anxious or you're nervous, or it's like, what's going to happen? And that's, looking back, really special, because you get to really know each other and really stand together in those times. And it really creates a deep relationship, especially when it's happened over and over and over again. So.
Yeah. Well, it's fun to get to do it with you, Tim. And this podcast was fun. That was a good one to end on. Audience, if you're having questions that are coming to mind, please send them to us. Our emails are really simple. Tom@dmarie.com, and then Tim's is Tim@dmarie.com. If you mix that up, don't worry about it. It'll get to one of us. So
that happens all the time.
It happens all the time. So send us an email with questions. We're looking forward to some of these episodes that we're going to be launching soon, and some of the guests that we're going to be having on. Come to our website, dmre.com, to learn more just about the company and what we're working on. And please just continue to listen and give us a review next time you're listening on Apple or Spotify. Thanks, Tim.
That's great. Thanks, Tom.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.